Hello, how are you? Welcome to another episode. My name is SeeWing Yee, and normally what I do is I will go over a housing market update on a particular metro, particular region, and particular city. So I'm doing a lot of updates on many cities throughout the country and all the hot real estate markets. So I'm using Redfin data to go over everything. So my name is SeeWing Yee from the Yee Real Estate Network. Just a brief background about myself. I've been in real estate consulting. You can call me a real estate matchmaker. This means over the past almost 20 years, I have worked with thousands of mom and pop real estate investors, most of them from California, because I live in San Francisco Bay Area for the past 33 years. But I take our investors, match their goals and objectives, and take them out of state to buy turnkey, passive, remote properties in the best, fastest growing markets in the country with the lowest affordable prices, and they can achieve cash flow properties, and they have property management in place in all the network markets, turnkey providers that we promote over many years. I have entered, there are 50 states in the US. I believe, I don't know exact, I have entered around 40 states. That means our investors, through my specific guidance, have purchased rental cash flow properties over the years in about 40 of the states. The only states that I have not promoted investment properties are in way up there in Northeast, in New England area, and have not promoted in the Pacific Northwest, in the way up there, Montana, Wyoming, Wisconsin, Minnesota. Those areas we have not done anything. And perhaps some like Nebraska, Iowa, I have not promoted any properties there, and I do not believe I ever will. So sorry for those of you that live in those areas, people that live in those areas. All right, without further ado, I'm going to talk about Riverside County, California, and San Bernardino County, California. So the population is around more than 5 million. I mean, it's a massive area of humanities. It's a fast growing. So I have no time to go over how there are many cities located in Riverside County, in Southern California, and of course San Bernardino County as well. So without further ado, let me share the screen, and I'm going to use the Redfin weekly sales data. So I'll discuss from a high level, and then toward this, the objective of my presentation is to help current owners of real estate in this area to determine what's going on currently, what has happened in the past, and what's predicted to happen in the future. The current homeowners that own a home in this market, and also for potential renter out there who wish to purchase at some point in time in this inland empire, if you will, of Southern California. And then finally, for real estate investors, right, which is very difficult. The number does not make sense, but still, some people still might want to invest, right, by rental property in Southern California, although I believe for a long time that the numbers does not work. That's why I take people to out-of-state markets, right? So without single-family homes, mainly single-family home residential investing. Okay, let's proceed. Now, for those of you that have purchased in these two regions in the past 3 years or longer, well, congratulations. For whatever reason you have taken some courageous action. You are able to overcome all the multiple offer bidding war situation, and you're able to buy as a investment property or as a primary home in these two counties. So congratulations, you have made massive amount of wealth in the past 3 years. Let me validate that by showing just from July 2019 the median price of a home in Riverside County is a mere 390K, all right? So watch, now as we fast forward, since the pandemic has begun, which changed everything, the median sales price at the peak is like last month in June 2022, has increased to a whopping 611,000. From 394 to 611. We're talking almost double the price, double the equity. Normally, in a normal historical appreciation year over year, over many, many years, it typically takes 10 to 15 years long term to accumulate this amount of equity. Okay, you guys have done it within 1 to 3 years. This is mind-boggling. This equity growth is historical. It will never be going to be replicated. So 30 or 50 years from now, when you sit down with your grandchildren, you can tell them, well, grandson or granddaughter, back in 2021 to 2022, the 18 months of the pandemic, I have created wealth by buying properties in this region. I've created wealth for ourselves, and we're able to create generational wealth. You can pass on this wealth from generation to generation using by taking action. But there's one caveat, there's one condition. My wholehearted recommendation is for you to continue to buy and hold your rental properties. Do not sell based on emotions, based on panic, based on what the negative doom and gloom headlines that we see every single day out there. All right. So anyway, all right. So the median sales price have achieved massive wealth. So now June 611 now is back down to 587. No, this is not an actual decrease in actual home price. It's just that the interest rate hike has caused people to afford less of a home. So this is a reflection over here, August 22 this year. The median price have come down for 587 based on the affordability factor. So this trend or not doesn't show any kind of indication of anything, in my opinion. All right, so you see the big gap, big increase in value, but moving forward, as we all know, we are coming back to a healthy market. This massive appreciation cannot sustain itself. So it is predicted by many experts that the home price appreciation is going to be in the single digit area. Exactly how much, we do not know. But suffice to say, just one more thing before we go any further, we are still at a historical low supply of inventory, very, very low, and the demand, although it have decreased quite significantly in the past few months, still the demand is pretty high. So there are still a supply and demand imbalance. So economic 101 says that when there are more demand than supply, which is still the case right now, then housing prices will go up, regardless what other doom gloom people are gonna say. There will be a crash, a bubble, correction, or housing recession, whatever that term means. I don't get it. All right, so let's go. Let's take the next step. Then let's go with the active listing in this county. Active listing right now is 7,215 homes that are listed out there in the multiple listing service, and which is a 22% increase of listings year over year this year from August 2022 to 2021. All right, so there are more listings, yes, and since the demand has subsided, so it seems like we have a lot more inventory, but it's not all that true because the demand is not as good. So very few houses are being sold at this moment. So let's go over that. All right. So let's go over new listings. This past month, the new listings are 682 houses this past month, which is from month to month from July to August, which is 24% less than last year, year over year. So we can see the trend. So so a lot of sellers, a lot of potential sellers are keeping their houses out of the market because they're locked in at a very low interest rate. They really have very little incentive to sell their house, which they locked in at less than 4% interest rate. To if they were to sell it and buy another house to upgrade, they're gonna have to pay a higher price. Not only that, plus they may have to pay 5.5% to 6% interest rate. So their mortgage payment will double. So it's not a good idea. So there will, having said that, so a lot of people are not selling. The individuals that are selling, they're selling for good reason. Maybe they are freaked out. Maybe they're panicking, right? And they want to, they have this FOMO, fear of missing out. So they're panic selling. So that's never a good idea, right? So a lot of listings. So then let's go over the pending sales. Okay, out of the listing, the pending sale is not very good, 482, right? So from the new listings compared to the pending sales, right? So it's lower, right? Pending sales only 482, 31% less than last year, right? Then the next thing is pending sale. Then we go over the homes sold. The homes sold is even smaller, 522. So there's always some people gonna back out at the last minute, whatever, because they suddenly could not qualify for the mortgage because of the higher interest rate. Those are among the reasons. So 522 homes sold this past month from July to August this year, 2022, and 31% less numbers than year over year from last year. All right, now the next thing I'm gonna really share with you, which is some of you are gonna freak out, but don't be. The price drops. Price drop does not mean that the houses are dropping. Price drop in a definition or the Redfin website is percent of active listings with price drop is 8.6%. So it's just that the sellers, they're trying to list their price at a higher amount than what the market demands, right? And they think they're in a multiple offer situation. They want to price their home higher than the last comp that closed within their neighborhood. So obviously, a lot of these sellers, though, perhaps they did not get the memo, if you know what I mean. So most likely, okay, so they're going to reduce their list price. How much is hard to say right now. Maybe less a few percent, like 3 to 5%, perhaps. We don't know. It's too early to tell. But let's look at the new listing median price, right? So ever since the rate hike began a few months ago, from 3 to 5 to 6%, dramatic increase in interest rates. Back in a few months ago, April, the new median listing price was 610. Now, still pretty competitive, 592. Not much of a drop. So still a lot of people still can afford some of these home prices in the open marketplace. So of course, in the Inland Empire, there's still a lot of people who have money. There's a lot of migration, as you know, people moving from the high price Orange County and Los Angeles to a lower price point into the Inland Empire. This has been going on for many years, but it has accelerated. People really accelerated everybody moving into the Inland Empire, Riverside County and San Bernardino County. All right, so this trend still is very hot trend. So and then let's look at the median days of the market. How long does it take before the house is sold? So 33 days. It takes a little bit more than 1 month to close a transaction. That's pretty healthy. It's not like before. before, a few months ago, it was like 3 weeks to close escrow, and so still pretty nothing out of the ordinary. All right, so medium season market is still pretty quick. Anytime within a month or so is a fairly still is a very competitive market. People, so the marketplace is still very competitive. I have to believe that. So look at the month of supply, right? 4 to 6 months is a balanced market. Anything less than 4 months is still a seller's market. So let's look at the weeks of supply, which is almost 14 weeks. So 4 weeks divided by 14 weeks is like 3.5 months of supply of inventory. Still a very low supply relative to the moderate demand. So therefore, I do not see housing prices dropping dramatically, at least year to date. So the trending is pretty normal, if you will. So all right. So yeah. And let me see, anything else? Okay, one final thing I'd like to go over, the average sale to list ratio. This means based on the final list price, what was the final contract price? So what's the percentage? So right here in August 2022, the average sale to list price is 0.998%. This means that the final sales price was a bit lower than the final listed price. So that tells you that the buyer have more negotiation power, have a little bit more leverage, right? They're able to negotiate for better terms or whatever, right? So it's a healthy, getting to be a healthier market, but the inventory is still very low, right? And so it's still a very much seller's market, and so here's my takeaway. Okay, I don't see any bubble correction, or for sure no crash, because the equity, people have gained so much equity, right? I mean, a lot of people have equity. They are not under stress. Sellers are not selling because they have locked into an interest rate. I don't see any trends that indicates to me that this market is cooling dramatically. No, it's just in fact, if the interest rate decrease ever so slightly toward the end of this year and early part of next year, we might see some very hot activities, more activities, and to make this a very good healthy, very healthy market moving forward. So that's all it takes. So just right. So that's this is Riverside County. So if you are a homeowner, potential homeowner, if you're a renter, if you have the means to qualify based on a higher interest rate, if you're gonna live with the house for the long term, right, for the next 5 to 10 years or more, you'll be fine. You can overcome any kind of short-term volatility in the market. If you're a real estate investor, that's kind of tough, right? The number does not make sense to buy a single-family home rental. Single-family home rental is of 500 something thousand. So if you're gonna buy as a rental property, if the rent is only like $2,700, you're not gonna cash flow. Your yield, your return is gonna be very low. That's why the numbers just doesn't make sense. The rent is just simply not gonna cover your mortgage payment and everything else, your debt service, unless you pay 70% down payment on a 500K single family home, or pay all cash. But then again, you're risking too much money. At the same time, all cash purchase for one rental property, which just does not make sense. You're not leveraging your portfolio correctly. All right, so that's enough for Riverside County. So the future looks very bright. Oh, by the way, if you're a renter, if you have the ability to buy a home, even at this moment in this market, you should do so. But if you do not, the worst situation to be in is a renter, because you are paying skyrocketing rent. I would not be surprised if you're paying at least $3,000, maybe even $3,500 monthly rent to rent a single family home in the Riverside County, right? So correct me if I'm wrong. Anyway, let me, for right now, I'm done with Riverside County. So let's go over to San Bernardino County. San Bernardino County is a little bit closer to Los Angeles, and whereas Riverside County is a little bit further out to the desert area. So San Bernardino County, let me scroll down. Sorry for this. Okay, here it is, San Bernardino County. All right, let's talk about this. Now, again, San Bernardino County is huge. More than 2 million people live here. So let's go over the medium sales price for the next 3 years to take a look at the big picture. Again, for those people that pull the trigger at 2019 or 2020, even 2021, if you purchase your home back at that time, a year ago, 2 years ago, 3 years ago, let's look at the rapid home price skyrocketing prices. So 2019, the median price of a home in San Bernardino County is 338. Then in 2020, right here has increased by 12% appreciation year over year, and the median price is 378. Then the skyrocketing price increase from 2020 to 21 from 378 to 465, a 23% appreciation year over year, 2020 to 2021. Then from 2021 at 470K, all the way up to around 518,000, another 10% appreciation. So skyrocketing appreciation is a one-time situation. Again, for those of you who bought homes as a primary home, you made a killing in equity growth. And if you are an investor, similarly, all right? So it's a good sign. So we're not going to expect double, triple, quadruple digit appreciation anymore, right? Expect single digit appreciation because of the still low supply and moderate to high demand moving forward, all right? So with that in mind, let's go over the active listing to see overall from across the board for the past few months, what are the active listings in relationship to other years? So active listing number 6,427. So it appears there are more inventory entering the market. In fact, there are 21% increase in inventory year over year since 2021. All right, and also the demand because of the interest rate has risen, has hiked so much in the past few months. It caused the demand to subside because the less people can afford to buy a home these days, so they're not selling as fast as before. Say goodbye to bidding wars, say goodbye to multiple offers. Your seller is likely to get 1 or 2 offers, right? So so a lot of homes being is on the market. So let's go over a new listing. New listing means over the past month, over month this year. What are the trends in the new listing for the month of this past month, July to August? The new listings is 555 homes, which is not very many, and then downward trending, which is 22% lower than last year. All right, and this is August. If you look at May, and what right as the interest rate was peaking exponentially, then you still have pretty good listing 740. So this is concerning. And then okay, 555 is new listings. Then let's go over the home sold. The home sold of 431. So not that many homes are sold because of the less demand, of course. Is 27% less homes sold year over year. All right, and then now let's look at the price drops. similarly, so too many sellers, they just not understanding the reset of the marketplace due to the affordability factor of interest rate. So 8% of the active listings are going through some price drops. So how much we'll know, maybe a few percentage point now. So don't worry about this trend. I suspect in the next few months or for the rest of this year, this trend line, this percentage of active listing with price drops will decrease from 8% to 4%, maybe to zero, because the sellers are finally getting the memo that the demand is not as high. They need to lower their list price and not being overzealous. All right. So this trend line is not something to worry about. All right. And then what's the next point? Okay, let's look at the new listing medium price, right? New listing medium price. You know what I'm talking about. So that is trending up, which is very interesting. That tells me this market is very competitive. The new listing price medium is 518. So it appears that a lot of buyers, even with a higher interest rate, they can still afford this type of homes. So you can see the trending up, right? In August, new median list price is 518, not much different than back in May, right? With 524, not very much different than March, right? When the interest rate was beginning to skyrocket, right? So tells me people doesn't really care about the interest rate that much, that they still want to compete and buy the home, even with a higher interest rate. So a lot of people can afford it. They qualify. So we have a lot of high income people, probably people moving from other part of California to a more affordable place here in San Bernardino County. People moving from Los Angeles, Orange County, whatever, to buy a lower price home. So that's what I see. All right, and then also let's look at month of supply. This is a very critical area. So month of supply is 15 weeks. So 4 weeks multiplied into 15 weeks, we're looking at almost 4 months of inventory, right? 4 months inventory is right on the borderline of our buyers coming to a balanced market. I'm not saying it's a buyer's market yet, too early to tell, because 4 to 6 months of supply of inventory is what we call a balanced market. Anything less than 4 to 6 months is still a seller's market, which it still is right now. All right, so let me see what else. And then medium days on market. Let's look at that. Around 1 month, which is pretty average, which is probably is a pre-pandemic level. Let me see what else. And finally, average sale to list price is a very good metric, important metric. So the is 0.99. This means that the final contract price, the buyer was able to negotiate for a slightly lower price to consummate the transaction based on the final list price. So this means that the buyer have a little bit more leverage. They're not overbidding, and there's no more multiple offers and bidding wars. So the buyer has a lot of negotiation power, incentives they can obtain from the seller as well. All right. So there you have it. That's pretty much it. So my big picture is San Bernardino County being really, but only 30 miles drive from Los Angeles, hopefully without traffic. Easy for me to say. It's a very affordable market, and I expect this market to be is already very competitive. If we see some slight decrease of interest rate from into the like 4% or 4.5%, I expect this market will pick up in activities very, very quickly. There will be a lot of demands, and people with especially toward this end of this year, People are focusing to buy homes, whereas during the summer, everybody is taking a pause, right? A lot of people are going on vacation, those kind of things. So, because of the, real estate is seasonal every year. It's like this. So nothing out of the ordinary. I expect this is continue to be a strong growth market. People can move in from a lot of places, and because it's a beautiful area to live, Southern California, right? So that's all I have to say. Hopefully this will help. If you please click the like button for the YouTube algorithm to help my YouTube channel, and subscribe to my channel, because I'm going to talk about other markets as well, similarly in all over the U.S. in good markets that you would like to know about, because I have access, we have network turnkey providers in many markets. I have a relationship with many realtors all across the country. Everything we do is about referrals. So again, I'm a real estate matchmaker. What does that mean? Real estate investor. I worked with over the years, many years. I match up a proper rental property in the right market out there, out of state, especially for California buyers, right? Because buying a cash flow properties in California is very, very difficult. So a smart California investor would be wise to venture out of state to buy cash flow much cheaper properties for long-term growth. All right, thank you so much for watching. And my name is SeeWing Yee from the Yee Real Estate Network. One more thing is feel free to access my website and put down your email address. You be part of our free member investment community, where you can receive weekly real estate investment opportunities out there in the out of state, so you can diversify your portfolio, take action, and scale your properties and create wealth on the investment side as well. Thank you so much. This is SeeWing Yee from the Yee Real Estate Network. Have a nice day. Bye bye.